Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday Market Moves, what happened last week in the markets, and what we expect for next week. And thank you for allowing us to do work that we find meaningful. Thank you for giving us the most valuable commodity you have, your attention. We promise to do our very best to give you a return on it. All right, let's go to the charts. Trying out a new microphone here. Let me know what you guys think. I got a new boom on it here. Let me know how the sound is compared to usual. All right, starting out as always with the S&P 500. It was up 1.3% last week, and this week it's up 1.3% again. Very bullish looking chart. All the moving averages are in sequential order. Technicals are, this is a textbook of when to sell, but I don't know that I would do so if we were in this. But I think we definitely need to start looking at your portfolio and try to see some things that you've been very successful at in the last year or so, as far as maybe taking some profits off the table, because this is very stretched, and generally speaking, whatever the general market does here, if it rolls over, your stocks are probably going to roll over too. Not necessarily because people are selling them because they don't think they're worth anything, but because they got to pay the bills. So buyer beware. This white line is the previous all-time high. I don't know how much longer this can go on, but I have a suspicion that when the Fed starts cutting rates, the game's over. Right now, what we got as far as the Fed cutting rates, this is what the bond traders are doing. 84% of them think that they're going to pause or continue to pause for their March meeting. Then once we go out to May, more than half of them believe they're going to cut by 25 basis points. Now, caveat, this has been wrong for the last year. Nothing's to say that they're going to be right, but we got to play the odds. These are some of the smartest traders in the world, and they're trying to predict what 12 guys in a room, the Fed, are going to do. So this is what they think right now. Okay, the dollar has, it moved up 0.1% this week, so essentially flat. Looking like it's starting to roll over, and the way we see that is we had a spike on Monday and then just kind of gradually coming down. We do have initial support here around 103.60 or so on the 200 moving average, the strongest moving average, the one that most traders pay attention to. So that's its initial support right there. But we think the dollar is just starting to roll over. Remember back here we said, initial level of resistance was going to be 103, and then after that was going to be this 400 moving average. At the time was around 105. We've darn near topped that. Maybe it could go up and touch this moving average and then come back down, but our bias for this is to the downside. 2-year yields have they've gone up a little bit for the week. Same for 10-year yields, which is making the dollar stronger. This is the one that we really care about. This is the 10-year yield minus the 2-year yield, and short duration debt is still paying more than long duration debt, which is what we like to call clown world. So anything below this white line means that we're in clown world, and that short duration debt is paying more than long duration debt, and anything above this white line is what we call normal times. And this is when long duration debt pays more than short duration debt. So once long duration debt starts paying more than short duration debt, we will exit clown world. And that is when, if we play the odds, that's when the recession starts, is shortly after that. So bond traders are some of the smartest people on the planet, and they see the deal right now is in short duration debt. So that's where they're putting their money. This is what we really like for our cash and have for a while, is the 1-month treasuries paying north of 5% for no risk. So you can have these on a rolling basis. You can have them auto reinvested on whatever brokerage account you got, or just go through treasurydirect.gov, and for zero risk, you'll get paid over 5% on your cash. Not a bad deal at all, in our opinion. All right, gold. Let's go back to the daily here. There we go. Gold went down slightly, not quite 1%. I think it was 0.7 for the week. We did hit through this yellow line here, which is the 50 moving average. a significant moving average. So we closed below that, probably because the dollar and yields got stronger. Why would people put their money into a pet rock if they can get paid on their fiat currency over 5%? And I'm in the same camp. But anyways, looking like it's going to start to go down. We would expect gold to get a little bit weaker this next week. Immediate level of support is going to be at 2,000. And then after that is going to be this 200 moving average around 1980. And a back up the truck moment, in our opinion, would be if it got down to 1900, which is the 400 moving average. But all the technicals are kind of in the middle, but our bias is to the downside for gold. Leveraging that with GDX, had a double bottom come up on Monday, but the reversal bar was to the downside, so we didn't play it. And kind of glad we didn't. Looks like it's getting a little bit cheaper. Next level of real support is going to line back up right here, and that's going to be $26, $25.50, something like that. If we're even half right about what gold is going to do over the next 12 to 18 months, this is going to be a real easy beta play. Another way to get a little bit more risky would be GDXJ. Again, we were looking at these on Monday and Friday. Didn't really see anything that wanted us to get it, but we did put a limit order in down here for 31, which lines up with this back support right back here. Franco-Nevada, still a deal. There was a tick if you could catch it on Monday. It got down into the 104s, which is a steal. Remember, we believe fair value for this is up around 125, 130. And this is the best gold royalty company on the planet. Okay? Doesn't get any better than this. They're the biggest, they're the best, and this should be a core position, in our opinion, in your gold portfolio. Barrick Gold. We said last week that this was a buy. Sure looked like it with that reversal bar to the upside if you could catch it on Friday, and it did nothing but disappoint and go down. We have what looks to be like a dividend coming up. Maybe they're anticipating that. We have a limit order in here for $14. Another beta play on gold, like this one a lot. Newmont made a purchase here on Tuesday, got a little bit cheaper. As far as any back support here, we're going to go to the weekly here so it's easier to see. There is a boatload of back support around $30, which is where I drew this white line. And we think it's probably going to hit it, if not get close to it. And if it does, if gold goes down like we think it will, it should be approaching that line. I think that would be one of the probably most prudent places to place a bet on Newmont if it gets there. Agnico Eagle, this one also fell out of bed. Next level of support is going to be, well, we'll call the first one kind of right where it is now. The one after that is going to be around 45, and then the next one after that is going to be about 43.50. I think if it got down to 43.50, that would be a great deal. Gold Royalty Corporation, we upped one of our limit orders. So we've had this $1.20 limit order in for a long time. We put in another one for 130, and it got to 131. So it didn't quite hit. Maybe it will next week if gold goes down like we think. This one will probably hit. They've got Cote coming online pretty soon. Now, apparently that project cost them double what they thought it would cost. But the beauty about a royalty company is they don't care. They're not invested in that. As soon as they start pulling gold out of the ground, they take their percent and they run with it. So pretty cool with Gold Royalty Corporation. We think this one's going to start paying off probably Q1 of this year, which is when this mine comes online and they start producing, and then this one should do quite well. Origin Royalties, we got this one from the Rick Rule Royalty and Streaming Bootcamp, and we put in one more order here. We got it at $49. We have another one in for 46, and it got down to that, but remember the market cap on this is pretty small, and so you really have to, what is that, 91 million, and a lot of this is closely held, not available to us. But just put your limit orders in around where they are now. And this is a beginning royalty company, kind of like Gold Royalty Corporation. And, if gold does well, this should be a very nice leverage bet to that. G Mining Ventures of the Gignac family. We got this one from the last Rick Rule Bootcamp. Yeah, so far it's just been performing really well. Essentially, on the first day that we bought it, the very next day the boot camp paid for itself. So we'll see. Brazilian miner down in a miner down in Brazil, and they're building the mine right now. We'll see if they're successful with that. More risky, but also more upside. Silver. Silver closed the week 22.59. We'll round up to 22.60. Got down around 22.20 or so. I think there's some real risk here of this breaking the 22 line. You see how we're getting lower highs as we're going here. All the moving averages are above it. This isn't looking real good. We'll see if we can hold this 400 moving average, but I think there's going to be more selling pressure here in silver. Next level of support is going to be around 21 if it breaks that 22. So we did place a silver bet here. We've got Pan American Silver after having Rick on the show. And this may be a bet that'll take a little while to ferment, maybe over a year or so. But remember, when we have these, we want to hold them for over a year, or we got to pay Uncle Sam a lot more in taxes. Now, here's the dividends on Pan American Silver. They've been about 10 or 12 cents for a while now. And as the share price gets pummeled, as long as they can keep that dividend going, the percentage of that goes up. So last year we had 2.6%. The year before that, 1.36. The one before that, 0.67. So the dividends are increasing for the last few years. And especially if they're able to get Escobal online, according to Rick, that whole mine down there is not even priced into the stock. So if all of a sudden they just start producing 50% more income, this is going to do very, very well. Another way we could leverage silver is SILJ, the junior silver miner ETF. And we got a limit order in down here for $8. Maybe that's stupid to have a limit order in on something so volatile like this, but I just think there's so much back support right around $8 here. We ran this one before and then just sold it for a trade. But we might be able to repeat that again. If silver gets down below 22, we believe this will hit. We may pull the limit order as it gets closer if we're able to watch this. But in the meantime, this is kind of an easy way to do it. Copper. Copper completely fell out of bed, down 3.6% for the week. Yeah, I'm not really sure what happened there. Maybe the recession is getting priced into copper as we speak. Way we're playing that is COPX. So this is basically just an ETF of a bunch of the big copper miners. We placed one bet on Friday, got it in for $34.50, and we're just running this retracement, and it's just hitting on the bottom side of that retracement. We had a double bottom right here. Like that one a lot. Maybe it'll get cheaper. Next level of support is around 32. And COPJ, so this is the Sprott Junior Copper Miners ETF. We placed a bet on Tuesday. I guess we could have got it a little bit cheaper, around 17 bucks on Friday, but whatever. Same kind of thing. It's hitting in. You guys can probably already see the retracement right here. Hitting in the retracement, and we have a double bottom right here. Like this one a lot. Arizona Metals really fell out of bed. We thought the floor was around 150. We were wrong on that. We almost bought more. I want to have Peter Granich on the show again and pick his brain on that. They're starting to do branch out in this company. I'd like to maybe pick his brain or Michael Gentile's. But closed the week at 132. Very leveraged to the copper price. With copper falling out of bed, this one fell out even more. Uranium. Okay, it's continuing to close above $100. Some sellers are asking 104 for the week, according to John Quakes. Cameco had their earnings report, and the two 800-pound gorillas in the room, Cameco and Kazatomprom, are buying uranium off the market, essentially competing with their customers because there's not enough of it. So I'm very ecstatic on the uranium market. I didn't have any idea that it was going to perform this well. So grateful that we found it and are invested in it. The Sprott Physical Uranium Trust, we took a little bit more profits here on the Sprott Physical Uranium Trust on Wednesday, and we put that into Origin Royalties and the gold royalty company that we just talked about. and we also put that into Glencore, coal, or, you know, they do stuff other than coal, but that's basically our bet. So we're taking profits in there, putting it into things that we think are going to do well over the next 1 to 5 years. And yeah, I like this fund a lot. They're still at a discount, not quite as good as it was a couple weeks ago, but at 6.39%, no pounds added, but love this fund a lot. I mean, 63 million pounds are off the market, unavailable to the utilities. This fund is the reason we believe that the uranium bull market got jump-started, because they pulled 1/3 of the planet's demand off the market, unavailable to them per year. Very, very cool. Okay, moving on to Kazatomprom. Kazatomprom had actually their earnings report came out that was bad and the stock shot up. As far as immediate support, we see it around the 50-day moving average. Technicals are kind of middle of the road. Cameco had bad earnings report and it fell down. You know, I think immediate level of support is going to be around $42.50, $42, somewhere in there. I don't really see any buys right now in the uranium sector. URA approaching this 50 moving average, which it's pretty much obeyed except for a week or so back here. So, you know, if you don't have anything in the uranium market and you want to make some kind of position, I think we're going to move to the point of no concern here pretty soon on this one. If there's going to be a general market pullback, these are probably going to get drugged down a little bit with it. We'd like to move to the point of no concern on this, maybe one more spike up like this, and we'll take some profits. URNM chart looks pretty much the same. We didn't do any selling last week on this one, but same kind of thing. Seems to be obeying that 50 moving average for quite a while. So if you feel so inclined to place a bet on this, maybe do it around that 50 moving average. URNJ, yeah, same kind of thing. This cup and handle pattern seems to be playing out quite well. We got an upside target of this, and you guys already know how we do this. We take it from the bottom, go to the top. That's $11. So if we take $11 from 24 and around and move it up, that's going to be around 35 or so. We're currently sitting at 27. Uranium Royalty Corporation. Okay, cup and handle right here. You guys can see it, and then it shot up. Looks like we're kind of forming a what we call in the business a bull flag. So basically, you have the pennant moving up, and then you establish a channel on the up and down side right there. The one thing that I don't like about this is we have this one lone bar up here that just kind of messes it up. I'm not sure if that negates it or not, but this does look like a bull flag to me. So we'll see if that plays out to the upside. Technicals are turning down. Stochastic's really low. MACD is rolling over, and RSI looks like it's going to go down a little bit. So maybe a little bit more selling pressure before it breaks out. Uranium Energy Corporation. Like this one a lot. Oh, I forgot to take this one off of the Rick Rule episode. We interviewed Rick Rule during the week. If you guys didn't see that, we will put it a link up here so that you can watch it. We talked a lot about uranium and the other commodities that Rick likes a lot, and we answered your company questions. So make sure you check that one out. Boss Energy, that one fell out of bed as well. I'm not really sure what happened here other than maybe the Cameco report somehow affected it, although I would think that would make it better. But I'll have to check the company news on this one. If anyone knows why Boss just fell out of bed, go ahead and put it down in the show notes. We'd love to hear your opinion. All right, oil. Oil's been looking pretty good. We are up 6.3%. So I think what is happening with this, there's a lot more tension in the Middle East right now, which is where a lot of the planet's oil comes from. Our big thinkers decided to bomb Syria and Iraq, but they didn't bomb Iran. I think had they bombed Iran, we would see this chart up here somewhere. You know, that could be I mean, that might do like a $20 overnight move if we did that. But there's a lot of tension over there, and I don't think that the market is pricing in the risk that comes with the Middle East and the tension over there and the price of oil. So when oil was cheap, we were buying. And I don't really see any buys right now in oil. The time for that was a few weeks ago. ExxonMobil, our favorite oil company on the planet, pays amazing dividends. Let me just show you here just so that you can see. 3.6, 3.2, 5.7, 8.4, 4.9. Now look at, this is what I like. Okay, so these are dividends going back to 2017, 77 cents a share. And then the next year, 82 cents a share. And the year after that, 87. And then a couple of years after that, 88, 91, and now we're at 95. So their dividends are increasing as time goes on, which is great. And, you know, I think generally speaking, oil is relatively cheap right now. And I think over the long run, over the next 5 to 10 years, those dividends are going to be incredible. Blackstone Minerals, we think it's a buy right where it is now. We have a limit order in just because we've got quite a bit of it for 15 bucks, probably a pipe dream. But I think anywhere around the $16 mark is pretty good. If you want to get something in on this white line, what is that at? 1567, maybe a limit order for there. They have a dividend coming up, so I think that's why this dropped down a little bit. But the dividends, again, are just, I mean, look at that, 9.1, 7.7, 10.1, 11.6, 8.6, 6.69. I mean, just incredible dividends. Love this company a lot. Very low risk, not nearly as much upside as some of the oil producers, but a lot safer. Natural gas is down over 11% for the week. This may be one of the reasons why we haven't entered a recession yet, is simply because we're able to produce so much nat gas and oil for cheap. And that could be keeping us from entering a recession sooner than we thought. Devon Energy, this is the way we're playing natural gas. There was a tick on Monday, got down into the 40s. We missed it, but that was a tick if you could catch it. If it comes back down there, I think that's a nice entry point, right around $40.70, something like that. Also, Equitable rolled over, probably because natural gas went down. Also, we have a dividend coming up here for Equitable. We have a limit order down here for 32. This was our starter position to get us interested in the thing. But, you know, I think anywhere around where we are now is a decent entry point. Coal, this is thermal coal, closed the week at 125. And we're waiting for around March or so to start looking to make some entries on this. And met coal closed the week at 316. We're going to be looking a little bit further out into June. Hopefully it'll get down to 250 at that point, and then we'll be looking to make an entry point. This is the coal ETF. This is, I think you guys were kidding when you asked me how come I don't do any technicals on this. There's nothing to do. There's no history. I mean, look at this one day here on only, okay, so this is only $23 a share, and there was a little over 2,000 shares that traded that day on volume. So very low volume. We need to see more people coming into this, more people putting money into this. I mean, look at this price action just on Friday. It was all the way up around 26, and then it closed around south of 24. I mean, just a lot of action going back and forth. We'd like to see this kind of, you know, get some history here, and then maybe we can start placing our bets, you know, come April, May, June, something like that. Glencore had a limit order hit for 10 bucks on Glencore. And then it shot down to the downside after that. Where is it now? Actually, it's lining up with a lot of back support right here. So right now isn't a terrible entry as well. And remember, so like when you're looking at these, if this is a company that you really believe in, you want to make your bigger bets the cheaper it gets. Remember, like if you go to the store and a can of tuna fish costs $1, and then you go to the store next week and it's only 50 cents, you're not mad, you buy more. That's what we do here. So let's say we bet $100 on Glencore, we do $10 here, $10 here, and then 40 and 40, right? Buy more the cheaper it gets. And then you'll be very happy when it reverses and you'll make more. Alpha Metallurgical Resources. Okay, this one was on here simply because you guys were asking about it. fell out of bed, hit the moving average, the 50 moving average, and bounced up a little bit. We're going to be looking for this one around April. Bitcoin is shot up to 40, what is that, 47,000 for absolutely no reason at all. I believe the wind blew. Platinum, now this one's kind of exciting. Okay, so Rick basically said that he thinks that platinum and palladium and nickel are going to be moving down over the next over 2024. And if we're investing in platinum, palladium, and nickel over this next year, we're probably going to be disappointed, which is a little bit of a bummer because we have been buying platinum and palladium and nickel. His reasoning was Russia is with all the financing they got to do for the war in Ukraine, they're selling whatever they've got, and what they've got is PGMs, and so they're selling them. So probably going to be more selling pressure on platinum and palladium. This is the fund that we're using to play platinum and palladium, the PPLT. But man, this sure does look like a buy point. I mean, look at all this back support right here, maybe even a stink bid around here for like 78 bucks. But if Rick's fundamental theory is correct, this is going to get cheaper. Palladium, same kind of thing, dropping out of bed. Yeah, what did it close the week at? 869. I mean, I remember not that long ago, it was up around $1,400. Now it's below 900. This is a fund where you could bet physical palladium, essentially a warehouse full of pallets of palladium, PALL. This one I kind of like a lot because what this is doing is this is bringing up the, this is adding platinum and palladium together, then dividing by two, and essentially you're getting the per ounce cost of both of those combined, right? And so right now, then what we're doing is we're relating that to gold. So how many of those two coins combined does it take to, the average cost of those two coins combined take to buy one? How much gold will you get for that? And so the average cost of these two coins combined will only buy you 0.4 of a gold coin. I mean, we're even below half of one here, which is the lowest that has been since TradingView started tracking this since 1985. Okay. But look at these moments in history over here. I mean, look at this. Like you could trade 1 ounce of those for 3 ounces of gold. Pretty impressive, right? I mean, even if we just get back to here, just north of 1, that looks like a screaming deal to me down here. But if it's going to get cheaper, it's going to get cheaper, and we'll wait for that. Sprott Physical Platinum and Palladium Trust, another real easy beta way you can play this. You know, you do have to pay for them to hold it. I don't remember what the expense ratio is, but they're not storing this stuff for you for free. But when, you know, if there's a hiccup in one of those three markets, South Africa, Russia, or Zimbabwe, this is going to go parabolic. BHP, placed a couple of bets on BHP. Nothing real scientific, just you guys remember the retracement from last week. We just run this here. Hits right in there. We like the bottom of the retracement more than the top, but they both work kind of anywhere in that range. And on top of that, it's hitting on the 200 moving average. So I think if I had to put a percentage on this, you know, going up next week, I would probably say the part that kind of worries me here is copper, because this is pretty well related to copper. Oh, that reminds me. I know you guys have been using TradingView because you've been using the affiliate link down below. Thank you for that. If you want to try it out free for 30 days, use that link down below. How do I overlay? I want to put a linear chart of copper over BHP right here. And I can't figure out how to do it. I can't find a YouTube video on it. If you guys know how to do that, do me a favor and put a comment down in the comments below, because I'd like to be able to see the correlation of copper to this, or you know, put a correlation of you know, whatever commodity, gold against I don't know, Barrick Mining or something like that. But anyways, yeah, looks like BHP is on the way up. Rio Tinto, same kind of thing. I suppose this is a buy. I mean, the chart looks very similar to BHP just because they're both in the same business. But I like the BHP one more just because we have the 200 moving average right here that is bouncing off of, but we might be establishing a little bit more. We did a starter position in Rio Tinto back here, and really wishing we'd bought more, but that's because we could see the future now. Yeah, it looks like Rio Tinto is also looking like a buy. TLT dropped out just a little bit, kind of flat for the week, underneath the 200 moving average right now. Essentially waiting on the Fed to pivot, which according to the traders, it looks like they're going to do in May. So got to hang on to this one for just a little bit longer, but you know, you get paid a little dividend every month. All right, and moving on to listener questions. Uranium bull market, ironically, wants to know about coal. He's asking about Whitehaven. This is on the ASX. Okay, looking like it kind of fell out of bed. Can we even draw a trend line here? That's kind of, I think I'm just drawing lines at this point. I think we're going to want to wait, you know, like Matt was saying, in that, you know, coal is likely going to be going down or sideways here for the next few months. And until April or so, that may be when we want to start scaling into this thing. The next level of support I see here is probably around $7, which lines up right nicely with some back support and also the 200 moving average. So that's kind of what I would have my eye on. RSI is a little, it's getting down there. We want to see this yellow line kind of curve down just a little bit more. Same with this one, MACD. Stochastic is in the toilet, which would suggest it might be moving up. But I'd rather just see a little bit more selling pressure and then snag it at a better price. And Bill wants to know about vanadium. Okay, so vanadium is used in batteries, and basically what's kind of cool about it is if you use it in a certain instance, it's completely recyclable. So this is the biggest vanadium miner on the planet. They're out in Brazil. This is called Largo. They produce about 7% of the planet's vanadium. As far as an entry point, Bill, okay, so see this white line? Let me go back to the monthly here, and then we can get a long-term outlook here. So this is going back to 2011. This white line I drew as close as I could get to the bottom when it hit back here in 2016 is around 90 cents. We're at $1.79 right now. And then let me go to the daily here. Looks like a bit of a double bottom going back into December. So it kind of went up and then back down, although it's a reversal bar to the downside and some massive selling here. So I suppose if you really believe in this company and really believe that vanadium is going to be taking off here shortly, you could make a purchase. I might throw in an idiot limit order around this 90 cents. And then maybe if you're going to bet $100, you do like 10 right now, and then 10 down here, and 10, and then 20, and then you know what I mean? Like progressively more in. I don't know anything about this company, but if we are moving to more electric and we are electrifying the grid more, and we're going to need more batteries and we're going to need more vanadium. So, you know, bet on the biggest vanadium miner on the planet, and this is what you got. Another way you could play this, we learned about this one from the Rule Electric and Battery Metals Bootcamp. This is Largo Physical Vanadium. And essentially what they did, it's the same company. It's this Largo combined with Sprott. And what they do is pretty clever. They basically store vanadium and then they rent it out to companies that need to use vanadium for their giant batteries and storage. And because it's 100% recyclable, what they do is they rent this vanadium out. And then once the battery is ready to be replaced, they get it back, they pull the vanadium back out of there, and it's 100% recyclable, so then they can use it again. So longer term, this company believes that they're going to be able to actually turn a profit, excuse me, turn a profit from renting this. Unlike some of the other funds that we have, like the Sprott Physical Gold Trust or Sprott Physical Silver Trust, where we have to pay for them to store this stuff for us on pallets and warehouses, this one, they believe, is eventually going to turn a profit from renting this vanadium out to companies and then getting it back, recycling it, and doing it again. So kind of a neat play on vanadium if you're interested in it there, Bill. Okay, and why did I bring up nickel? Oh, Duncan wants to know about Centaurus Metals. and they're primarily a nickel miner. So we figured we'd start with the commodity itself first. This is what nickel looks like right now, just absolutely getting pummeled. If Rick is right, this is going to go down even more. Is coming up, what would that be, a quadruple bottom? 1, 2, 3, 4, although it looks like it's going to go down, look, based on that last tick there. Could get some more selling pressure in the technicals down here, but here is Centaurus Metals. So if we go back to nickel, nickel took a bit of a beating. So the company that is exploring and looking for nickel is going to go down even more. Now remember, the market cap on this is very small, 148 million. A lot of this is closely held, a third of it is. So the only part that's open to us is even less than that. And so, you know, limit orders only is what I'm saying. As far as an entry point, okay, so I drew this white line in just to find some back support right back here, and it looks like around 25 cents. Looks like it's got quite a bit of back support. Technicals here are just pummeled, right? But it looks like it's starting to actually kind of curve back up. So they had a bunch of press releases. I didn't go through them. But I think there must have been some bad news there, which drove it down. On top of that, nickel went down as well, so that doesn't help. But maybe an entry point around, what would that be, like 28 cents, and then kind of 28 to 25 cents might be an entry point if you want to get in on this one. Now remember, this is very, very risky. But you know, Rick talked about it. If you go to the last video that we put the link up on, he opined on this one for about 4 minutes. And it starts at the 42-minute mark. So it's potential world-class deposit, but as long as Russia is continuing to sell nickel, this probably isn't going to do very well. Food for thought. Brad wants to know about SSR mining. What do we see in the technicals here? Let's look at the fundamentals real quick. Overview, 1.95 billion, so do all the market orders you want. Price to earnings ratio, how much is it per share? $9.55 and $1.03 earnings per share. That's pretty good. Looks like they got some dividends as well. Nice. They've been paying 7 cents a dividend for a couple of years, and then before that it was 5 cents. Goes every quarter. Okay, we like that. What else do we got? Are they diluting shares? Where are we? Statements. Dilution. Diluted shares. No, looks like they've been doing some buybacks. Okay. All right, now for an entry point. Okay, basically all I'm doing is I'm just looking back to see where the most price action is. This is kind of interesting. We're just right around where we were in the COVID crash back here. Let me pull up the monthly to get a bigger time frame here. Okay, so this is going back to 1997. Yeah, okay. The way I don't always do this on the show, but what I usually like to do is I like to go out to the longest time frame. So here we're on the monthly, and then I look at the technicals. Okay, all pretty low in the monthly. Then I go to the weekly, all pretty low in the weekly, and then I go to the daily. And if I'm doing a swing trade, you know, some short duration time frame, then I'll go to the hourly and 30-minute. But that doesn't really apply to this. I kind of think about where we are now. We've got some, okay, so RSI is starting to angle up. MACD is starting to angle up. Stochastic is starting to angle up. It looks like we might have carved out a little bit of a bottom right here. Looks like we do have a dividend coming up, so that might be driving a little bit of selling pressure. I mean, on the other side of the coin, this is the opposite of what a bullish chart looks like. All the moving averages are in reverse sequential order, but ironically, that's when the deals are. You got to buy when other people aren't buying. So this is a gold, I think gold, silver, copper, zinc, and lead, I think is what they are their commodities. So yeah, if you can buy and hold this thing for over a year, I think this might be a way to do it. The one thing I'd like to see in this is I'd like to see some kind of double bottom, and then that would be the secret sauce. See, like right here, we have a double bottom. Look at that, like went up, boom, and then it went up after that. You know, we're not going to know what's going to happen 3 days beyond this, but I think kind of anywhere right around where we are now. Okay, well, I hope you guys got something out of that. Thank you for always being here. If you like the show, you can support it with a donation using the link down in the show notes. And thank you to all who have donated: Scott, Gary, Antonio, Josephine, Jeff, David. And thank you for tuning in. Hit the like and subscribe, and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.